Hi YouTube family, this is Mika Coleman with Tax Deed and Overages, and today I want to talk about why investment property interest rates does not matter in this industry. So I'd like to start off, before I forget, if you are still wanting to know more about this niche and about tax deeds and overages, I suggest you going to purchase my book. It's on Amazon and it's called The Best Kept Secrets to Real Estate, and it goes over a lot of details about tax deeds and overages. It has a lot of resources in there just in case you're still on the fence, you don't know a lot about it, and you just want to read up on it. I have a resource, and this is my book that I wrote because I was so passionate about this topic, being an investor for over 20 years in this industry of real estate. By far, this is, in my opinion, one of the best investment strategies I have ever taught, I've ever became a part of. I just love tax deeds and overages. So back to the topic of why I personally don't feel like interest rates for investment properties is not a thing. Now, I know cash is king, guys. Cash is king. However, in this industry, you definitely have to have cash, or you have to have business lines of credit. I plan to go to the National Tax Lien Association this year, and they're talking about how you can leverage your tax deeds. I know a few resources that have done it, so I'm going to learn even more about it. But what I really wanted to talk about is the topic of interest rates, because a lot of people always ask me, what do you think about these interest rates? You know, what are we going to do as investors? And I'm like, why does it even matter? Like, honestly, in this industry, tax deeds, you don't really have to worry about the interest rate. Number one is because you're buying the properties all cash. Now, you may be concerned about the end buyer or the end investor, but there are several different ways that you can become the banker and do lower market interest rates. Now, I always believe that there's more than one way to skin a cat. Now, some people are like, I need my cash on hand. And so I wanted to talk about this topic of, investment property interest rates, because a lot of people are like, well, how can I unload this property with the interest rates being so high and not being able to get a buyer? I always say have people do a high down payment, and then you become the bank and they pay you. If they don't pay, guess what? You get the down payment back and you get the property back. So when you ask me about investment property interest rates, I really feel like that is not something that you need to concern yourself in this industry. Why? Because the majority of all tax deed auctions is cash. Now, I've been to a few where they have credit cards, but at the end of the day, you don't need to finance these properties. Now, if you're looking for a long haul where you're trying to do a rental and you want to get your money out, there are different resources that you can utilize that I talk about in my one-on-one, in ways that you can leverage these properties without having to get a loan. But those are for more so of the long-term strategies. So if you are an investor and you are concerned about the investment property interest rates, I suggest you look into tax deeds so you don't have to concern yourself with the market rates. Another thing too is I like to tell people how to, actually I did it, and I guess I was talking about it, but then one of my students heard me talk about business lines of credit, and he took it another step. Another thing I wanted to talk about was you can leverage, if you have a house, you could get an equity line of credit, which interest rates are still a little bit lower than an investment property interest rate. So, but what I really want you to get from this video is that interest rates don't matter in this industry. Like, you do not need them. Like, for what? You're paying cash for them. So interest rates should not be a factor for you, because most of all these properties that you're purchasing are all cash. If you are trying to hold them, then that does become a play. However, like I said, you could leverage it by doing a line of credit, which rates are oftentimes a lot lesser than purchasing an investment property. I'll tell you a little bit about me. The reason why I'm so passionate about this is because, like you, if you're watching this video and you've been an investor and you've done it the traditional way, if you were investing in 2008 or 2009, you probably have PTSD, because I have PTSD from that, okay? Because I had about 6 or 7 properties and they were all mortgaged. And so when the market crashed, I had all my eggs in one basket, and I vowed to myself that I would never get a mortgage again. Now, I kind of lied to myself, because I did purchase another property for myself and I mortgaged it. However, all of my investment properties are mortgage free. I literally have no mortgage on the properties that I own in my tax deed portfolio. Why? Because I paid all cash. Now, did some of them need fixing up? Yes. What did I do? I paid all cash. Probably because I still have a little PTSD from the mortgage downfall. So I was like, if I learned anything from that, is to not over leverage. And so I'm saying that all to say, because I feel like we're due for a downturn now. I'm just waiting for it to happen. Don't get caught with your pants down with worrying about investment property interest rates. Don't do it. Go the tax deed strategy or do tax liens. I personally like properties. That's why I stay with tax deeds and not tax liens. But that's a whole nother situation. That's a whole nother conversation. I hope this video helps. If you have any more questions or comments, or you like the information that I provided, please don't forget to click that like button. Or if you have any other questions, please put comments in the comment box. I would love to hear. Also, too, if you want to know more, my book is in the link below, as well as if you want a free guide about tax deeds and overages. Happy investing, you guys.